Hello everyone. Wajahat here from Khan Production. This is my second video here. I would like to thank everyone for their support. Please like, share and subscribe for more videos. Today we'll learn about assets, their features and their types. So let's get straight in. First of all, what is an asset? An asset is a resource or property having a monetary or economic value possessed by an individual or entity, which is capable of producing some future economic benefit. In accounting context, an asset is a resource that can generate cash flows. Assets are found on the right-hand side of the balance sheet and are generally stated at cost or market value, whichever is lower. Assets are generally brought in business to benefit from them and to increase the value of a business. Assets are also referred as source of funds. Important features of an asset. The 6 important features of an asset are: price or economic value. An asset usually has a price or value in the market. Such price may be either paid or is to be payable. Generate revenue. An asset must have a capacity or potential to generate revenue. Maintenance cost. An asset usually has a maintenance or repair cost. Depreciation of an asset. An asset usually undergoes depreciation over a period of time. Depreciation is the distribution of the total cost of the asset over the useful life of the asset. Another name of depreciation is amortizatio. Estimated useful life. An asset usually has an estimated useful life. It is an approximate lifespan of an asset to carry out and perform various operations and tasks for which it is designed or made. Scrap value. As an asset is used over time to perform various functions, it starts losing its shell life. That is, its estimated useful life gradually starts falling. After its life ends, it is no longer capable of performing tasks, operations or functions for which it was originally designed. It becomes a scrap but still holds some value in it. This final remaining value of a dead asset is called a scrap value. Classification of assets. Assets are classified into different types based on their convertibility to cash, use in business or on basis their physical existence. Convertibility. Physical nature. Usage. Convertibility. One way of classification of assets is based on their easy convertibility into cash. According to this classification, total assets are classified either into current assets or fixed assets. Current assets. The assets which are easily convertible into cash are classified as current assets. Current assets are generally of a shorter lifespan as compared to fixed assets which last for a longer period. Current assets can also be termed as liquid assets. Assets like cash, stock, inventory, marketable securities, short-term investments, fixed deposits, accrued incomes, bank balances, debtors, prepaid expenses etc. are some common current assets. Fixed assets. Fixed assets are of a fixed nature in the context that they are not readily convertible into cash. They require elaborate procedure and time for their sale and conversion into cash. Generally, the value of fixed assets decreases over a period of time, known as depreciation. Other names used for fixed assets are non-current assets, long-term assets or hard assets. Land, building, plant, machinery, equipment and furniture are some examples of fixed assets. Second classification of assets is based on their physical existence. According to this classification, an asset is either a tangible asset or an intangible asset. Tangible assets. Tangible assets are those assets which we can touch, see and feel. Intangible assets. Intangible assets cannot be seen, felt or touched physically by us. All fixed assets are tangible. Moreover, some current assets like inventory and cash fall under the category of tangible assets too. On the other hand, some examples of intangible assets are goodwill, brands, franchise agreements, trademarks, patents, copyrights. These are also classified under assets because the business owners reap monetary gains with the help of these intangible assets. Third way of classification of assets depends upon their usage in business. According to this way of classification, assets are either operating or non-operating. Operating assets. All assets required for the current day-to-day transaction of business are known as operating assets. In simple words, the assets that a company uses for producing a product or service are operating assets. These include cash, bank balance, inventory, plant, equipment, etc. Non-operating assets. All assets which are of no use for daily business operations but are essential for the establishment of business and for its future needs are termed as non-operational. This could include some real estate purchased to earn from its appreciation or excess cash in business, which is not used in an operation. Got a burning question to ask? Write down in the comments below. Thank you for watching. Please like, share and subscribe for more videos. It will only take a moment of your time.